Do you think, just a little follow up on it, do you think that all the, it's like almost Jerome Powell has become this rock star. Anytime he says something, it's almost like a Kardashian, walking down, and you got to get a picture of him because it is so rate sensitive that they're just jumping on every opportunity to do this. And the whole market, because of the media, the way it is, we're just hanging on every word thinking that's the next thing.
Right. Well, and that's particularly true when you hang on the next word as it relates to headlines. We've talked a lot of times about beware the headlines. So many people, I mean, the consumer, the general public, that their attention span is so short that a lot of folks just are driven by the headlines, and they don't read the detail. They don't read the data. And I think I've commented before, when you see news stories, particularly in the financial area, a lot of times there'll be a reference to how many minutes of a read it is. And my theory is, when somebody sees an article that's about the financial markets, and if it says a 10-minute read, well, you're going to lose half your audience right there. They're going to look at the headline and move on. So that's an important thing to understand, is that you got to read the detail to really grasp ultimately what's going on. And in terms of the mortgage applications, the sensitivity from a move in mortgage rates is relative to, depending on the type of transaction. Since the Fed announcement, mortgage applications for purchases have dropped. And again, we're talking national numbers here, but they've only dropped about 7 or 8%. Not horrible, not a disaster, but certainly they've dropped. The refinance side, on the other hand, the mortgage application activity has dropped in the range of 26 to 27%.
Wow.
Now, why would you have that divergence of reaction to the higher rates depending on those two transaction types? Well, the answer is relatively obvious. If you want or need to buy a home, and particularly if you're what we call a situational buyer, we've talked about weeks ago on the program, where you have a need, where you have to move. You've got a job promotion, your job relocation, or you inherit a house and you and your family don't want to keep it, you need to sell it, those kind of things. So what happens is, on the mortgage side, or I'm sorry, on the purchase side, that'll be a little less affected by a change in rates versus a refi. Refi is more of a discretionary transaction. 0.5% in rate can make a big difference if for your refinance goal. And so that's why you see that divergent effect of the higher rates between a purchase and a refi. So yeah, the refi boom definitely has dissipated. It's back to there's more activity than there has been, but we certainly have not gotten back to the heyday of a couple of years ago when refinancing was off the charts.